Hey there, it's Blair here at Time Trades. Thanks for joining me this weekend. It is Saturday, March 4th, and this is your weekend video. Okay, let's take a look at what happened over the week. Obviously, the big event was the huge pump that we experienced on Friday. So if we go and take a look at our NQ chart here, we can see how impressive that rally was. Now, of course, I think the question on everyone's mind is this the start of a new move up, or is this simply one of those violent bear market rallies that is very powerful but short-lived? So that was a question I've been asking myself over the last few days, and I think I've got an answer, or a answer, probably not the answer, but a point of view that I'm going to share with you on today's video. Okay, so let's give ourselves a rating for last week. I think I give myself about a C on this one. I mean, not great, not entirely bad either. But what's happened with price is we're back inside this green wedge here. I actually thought that we had confirmation of separation when we got this air gap here between the green wedge and the top of Thursday's bar. But of course, Friday had very different ideas, and we got that giant bar on Friday. So where does that leave us? Well, we're back inside this green wedge again. And this green wedge, if you're not familiar, this is sort of my confirmation wedge. Above this wedge, and I turn very bullish. We separate below the wedge, and I turn very bearish. These are GAN fans that are anchored to Mars cycles. So that's really what I'm tracking here. There's some very interesting higher level patterns that lead me to believe that this can create a very good risk reward zone once we get some confirmation of direction going either up or down. So when I say confirmation, what I mean is really separation above, where I see an air gap between the top of the wick and the green. Or so that would be separation below, or separation above, of course, is the same thing, but with the bottom wick. Okay, so we've got a lot of news coming up next week. You can see I've added the little news events coming up here. We've got a double dose of Jay Powell on Tuesday and Wednesday, and then we've got non-farm payrolls on Friday, and then we've got CPI the following week. So it was notable how little news was dropped this past week, which I think also contributed to the conditions of Friday happening. But let me just show you why I think Friday happened, and a couple of learnings that I've got, because honestly, I should have caught this. I should have been on top of this. What you're looking at here is the Qs with something called the juice indicator turned on. And the juice indicator in the Time Trades web app indicates a set of alignments, one or more alignments among planets, not your traditional conjunctions or oppositions, but planetary alignments. And occasionally these alignments get very precise. And that's what a juice spike is. And you can see how historically, maybe about 3/4 of the time, juice spikes do tend to align with bullish days, plus or minus a day, right? So you can see here, there's some, back in October 3rd, October 4th, big juice spike, and that was a huge pop in the Qs. We had one of these juice spikes on Thursday, okay? The last one we had was February 15th, and you can see how that lined up with a pop. And the next one we've got coming up on April 4th, okay? So these are not machine learning identified dates or times. These are simply planetary alignments, very simple alignments that are calculated in advance for us. So that's the first thing I missed. I should have been on top of this. I should have mentioned it in yesterday's video, because they do have a fairly good predictive ability to identify a cluster of bullish days. Okay, so that's number one. Number two is a little indicator I've discovered called VOLD, or volume delta, I believe is what it stands for. So if we go and take a look at the Qs, we've got the this is the Qs in 30 minutes in TradingView. And if we zoom in here, and you can see I've got my GAN fans on, I'll explain those in a sec. But this indicator on the bottom here is called VOLD, okay? And I'll include a link to this indicator in the comments. So if you want to add it to your chart, you can. But look at what happened on Thursday, right? We got a big drop down in price, and VOLD made a very low, a very minor low, okay, compared to that. And then it flipped in the afternoon to go positive, all right? So what this is, it's just New York Stock Exchange up volume minus down volume. So it's a volume indicator, and it shows the volume on stocks that are up subtracted by, and then you subtract from that volume on stocks that are down. So it can give a very good divergence indicator when you're looking at indexes, which we are here. And you can see how we got this gap down on Thursday, but that was not confirmed with a lower low of VOLD. VOLD did not make a lower low. In fact, so it diverged from the lower low in price. So that was the second clue that I missed, that we were setting up for a pump. So with those two clues, I think I'll be better prepared for next time, and hopefully so will you. All right, so that's kind of the review of what happened at the end of the week. So let's take a look at what we think is going to happen next. All right, so we're over here on our NQ forecast, and I want to talk a little bit about the moon right here, because there's really three things that I track with respect to the moon, okay? So there's the GAN waves, which are these yellow and blue lines. And there's the moon signs, which you can see we're only showing 2 of the 12 moon signs here, Leo and Aquarius. And then the third thing that I pay attention to is moon phase, full moon, new moon. So we're coming into, starting on Tuesday morning, we're going to be in the negative phase for all 3 of those lunar factors. Right, so we're going to be in the red part of the lunar sign as we transition from Leo over to Aquarius. We're going to be going from yellow to blue in the GAN waves, and once the full moon is over on Tuesday morning over here, the illumination of the moon, of course, is going to decrease. Right, so that's going to decline over the next couple of weeks. Okay, so the moon is becoming negative, is the message there. Let's also take a look at a few other factors that we've been talking about. I want to take a look at breadth, okay? And I think it's important to note that when it comes to the option structure, we've got the famous JPM Collar call wall sitting up here at 4065 in the ES. And what that means is that prices above that, the market makers are going to be selling futures in order to hedge their position, okay? So that doesn't mean it's impossible for prices to go above that green line. Obviously, it happened over here in February. It's just that there's a drag on the market as the market makers have to hedge their position. Okay, so that's something to keep in mind here about 4065. The other thing I want to talk about here is its breadth. Now, one of the things I like to see when interpreting breadth is kind of higher lows. So we got arguably a higher low here on breadth. This is the McClellan oscillator that we're looking at. So we got a higher low here on breadth on the ES, and it turned back up above 0. So you can make an argument that breadth is in a positive configuration here on the ES. However, I think there's a number of other factors that lead me to believe that Friday's pop is more of a one-off. So if we go and look at the QQQ breadth, this is the McClellan summation index. That stayed red, that stayed below 0. So we're still negative on the Qs when it comes to breadth. If we go and take a look at liquidity, so here's the Fed balance sheet, which we can get with by using basically a custom symbol in TradingView. So if you type all this in, you can get actually a pretty good approximation of the Fed balance sheet. Still very negative. So that's the orange line here. Blue line is the SPX. So the Fed balance sheet still in a very negative configuration even on Friday. Okay. And then looking ahead beyond March into April, I like to take a look at recurring patterns with respect to Mercury speed and the Mercury retrograde cycle. So that is coming up into April, and that has been a reliable generator of declines over the last few years. So anytime you see the yellow line go down, that's Mercury speed relative to Earth declining. You can see how that correlated with the December dump, and it also correlated somewhat late, though. It did eventually correlate with the August drop. And we can also see here how it correlated almost perfectly with the entire drop from April into May last year as Mercury speed declined. Okay, so that is also coming up very soon here. We've got Mercury speed peaking March 20th and then declining into April. And that aligns with a cluster of pivot low probabilities here in time trades. So that's something to be aware of as well. So when you net it all out, what does that mean? Let's go back and take a look at our forecast and see if we can update our yellow line of price forecast here. I've decided to more or less leave this unchanged for the reasons that I mentioned. I believe that Thursday and Friday's pop were one-off events and not something that is really the start of a lasting bull run. I explained the astrology reasons for that. The juice spike that I believe was the primary astrological trigger for that, as well as we had an imbalance on the volume side where up volume wasn't confirming, and that also provided the technical foundation for a pop-up. But starting Tuesday after the full moon, all of the lunar factors that I track are going to be in a negative configuration until March 16th. So the logic behind this yellow line here is still valid. So I'm going to leave it in place. And I think that the target price remains valid about It starts about halfway between these orange magic level bands, and it spans down to to the top of this 1 by 1 here. Okay, so no change in the forecast for the coming week, and our primary takeaway is that Friday's pop-up was an anomaly. We do think that there's a potential for it to continue up. Certainly there was a lot of momentum there, but above 40.65 in the ES, it's going to be very difficult for it to make headway. All right, so what I want to share with you next is Netflix. I've been tweeting a little bit about Netflix, and I want to share something that I noticed the other day. So I've gone and added GAN fans to Netflix here. As you can see, there's a ton of lines, and I'll include a link in the comment section to the video that explains how I draw these lines and why I draw these lines and why it's important. But something I want to call out to your attention here is if we anchor a GAN fan over here on May 12th, that's the low in Netflix at about 180. Oh goodness, the low is 162. Holy, okay. So if we just track this blue line up, and let's play a game called Count the Gaps. So we've got one gap here on June 10th. This isn't technically a gap, but it's a pretty good air pocket of very low volume. Another one on July 20th. No gap here. Resistance here. I'm going to count this as a gap, even though the line does go through price. There's a huge gap below it. So we're at 3 now. Okay, we've got 3 strong bars here coming up next, but technically not gaps. Here's our 4th gap, drop down below it. Another strong bar going up through it. 5th gap. And we've got, okay, I'll call this the 6th gap up here on February 21st. So this can create a very interesting trading strategy. If you get your GAN fans in the right spots, the 1 by 1 is going to, there's going to be gaps over the 1 by 1 line like that. So we're coming up to another 1 by 1 coming up here from October 13th. So we may be seeing a situation where we get a gap down below that. Netflix has been very weak lately, even with that huge pump on Friday. That's the best kind of candle it could muster up. So it's still very much in this GAN fan wedge coming down from February 9th. And we may have a setup here for another one of those gaps down below thick blue, especially when it's triggered by one of these news events that's happening next week. Okay, that's that. I also wanted to share maybe a little bit on Apple. So if we take a look at Apple along the same lines, okay, and zoom in here, we can see here's the 1 by 1 down from February 16th. And look at the gap we got on Friday up and over the 1 by 2, okay? And it stopped right at the declining 1 by 1, right? So again, this is telling me, and this is confirmation that I've got the GAN fans in the right spot. If you look to the left, we can see another GAN fan here and another gap up over the 1 by 1. Like, this stuff is just, it never ceases to blow my mind. All right. So that's something I wanted to share on Apple and Netflix. Let's go and take a look at the dollar. I talked about the dollar last week. So if we bring up DXY in time trades, we can see here we still have this ramp up in the dollar peaking on March 13th. And we've got a high probability pivot high on March 20th. So this is still in place, this bullish backdrop of machine learning forecasts for the DXY. And it's interesting that this is happening during the week where we've got a bunch of news drops, with lots of Fed speakers and Jay Powell's testimony, and also data drops on Friday. So that could be the catalyst here for this forecast move up in the DXY. Okay, next up, I want to talk about crypto. So let's go over here and take a look at BTC USD. I'm going to turn off the short-term waves. We've talked about that already. So we got a big red candle on Friday, and this certainly led to a big move down. And we can see here we've got an increasing probability of moves down on March 16th, March 17th. So it looks like this is not over yet. We may retrace even more of this pump up in Bitcoin. So be prepared for that. One of the things I want to share with you on the TradingView side, if we go over here and we take a look at Bitcoin, and again, this is why I think that GAN-FANs are really the #1 tool that's part of the Time Trades toolkit. So if we zoom out a little bit on the daily, we can see here we've got this thick blue GAN-FAN. But where's that coming from? If we double click on it and click on coordinates, this is the 1x1 coming up from 0, right? So if we let's take a look at the date. Where was this anchored? So this was anchored over here on the low on November 21. Okay, so anchoring GAN-FANs at $0 has now resulted in 2 very good trades for me. I was able to take this Bitcoin short, as you could see it struggling right here at that 1x1 up from 0. And of course, the other one was oil and natural gas. You can see another example here of the 1x1 anchored at 0. Oil basically was going down for 2 straight months. Put a GAN-FAN at 0 on the December 15th high, and you can see how price stopped right at that 1x1. Just incredible stuff. So yeah, I'd encourage you all to, if you're new to time trades and just getting started using it, go nuts with the GAN-FANs. And if any of you would like some assistance on how to configure this, just let me know, reach out to me. I'd be happy to share my experience with you and how to make the most of this powerful tool. Okay, so that's Bitcoin. We've got a bit of a bearish bias here still on Bitcoin. The Time Trades machine learning thinks there's still a little bit more of a move down to come. Maybe we'll take a quick look at Ethereum. It's kind of the same message on Ethereum as well, with a cluster of pivot lows coming up here right around March 18th, 19th, 20th, right around the equinox. All right, so that's crypto. And we'll close today's call with a look at Indian stocks and the Nifty 50. So we can see the Nifty here with GAN-FANs on. And zooming in a little bit, we can see that price recovered a little bit with the Friday pump, in line with these forecasts, these probability forecasts that existed here. And we're right at the 1x1, which has acted as resistance. So I think we're going to see some more resistance here. We've got a small little probability of a pivot low on March 15th, but I think with everything else that's going on, with the moon going negative, with the probabilities of these moves up declining, I think we'll see a pull down into the low 17,000s on the Nifty. And then once we get past, this area here around the 20th, we start to see some nice combinations of probabilities with moves up in line with with pivot highs. Okay, so that's it for this week. I hope you all had a great week trading. Good luck next week. Trade safe, and we'll talk to you again next weekend. Bye now.